All right, good afternoon, folks. Today we're going to take a look at the British pound 6B. This is a daily chart of the continuous contract. The front month is March, which is 6BH. However, we will take action in the June contract, which will be the next front month. So it's going to be 6BM to allow more time for this particular trade to materialize. But what we're looking at here is a potential head and shoulders top, long-term head and shoulders top here on the British pound. Very reliable, high probability pattern. They don't occur that often, so when they do, we get pretty excited about it. So here's a daily chart. We got a left shoulder, we have a neckline, a head, neckline, and right shoulder. You see we've cracked the neckline right here, and as we typically will see in these type of formations is they'll come back and retest the neckline. So you can see we've come here and kissed this about 2 or 3 times, rejected, came back down. We made one last push up, and now we are falling back down. Now, there is a lot of volatility right now in the overall markets, in particular the indices, and of course that will carry over into the currency markets, metals, interest rate markets, and so forth. So we always want to be cautious, but looking here on this daily chart, you can see that from the daily, we're looking a little tired. You can see the longer term moving averages starting to roll over a bit. But if we go to a weekly chart, you can see that we are just in a continuation of a long-term downtrend. So we've come back up here in late December, early January, retested the 200-day moving average. It looks like we want to make the next leg down here on a longer term perspective. So we do want to have a longer term perspective. This is not a trade that's going to happen overnight. It's going to take some time. That's why we want to go out and give ourselves a long enough time for it to happen. Target on the head shoulders is really just the distance between the top of the head down to the neckline. So we could measure from top of the head down to the neckline right here, and then we measure that down from our entry. So we're looking at an entry right here of around 130, 129 and some change, coming down to around the 123 area. So that's a 700-point move. That's about a 700-point move. Each tick in the British pound is $6.25. So we're looking at about a $4,300, $4,400 potential move in the British pound. Now, what we can do is probably start our risk up here in this level. So if we're looking at shorting right around here, initial target can be down right around here. We'd like to find some level of structure. Initial stops can be above the head. More conservative risk would be above the right shoulder. And you can see that that puts us at slightly above areas of past structure. So right around in here, and that gives us roughly a 2-to-1 risk-reward ratio. Now, what I like to do when we have these high probability technical patterns, I also like to compare that from a seasonal basis, so seasonality basis. So what I did is I looked in our smart seasonal scanner. I ran a scan for the British pound, and you can see that we do have a bearish seasonality trend, favorable score on or around Feb 19 going into March. Now, those aren't exact dates. It just give you some guidelines that says, hey, we have a high probability seasonality trade that's been profitable 86% of the time over the last 7 years. Average profit's been about $1,200 per contract. Now, based on the technical pattern that we're seeing here, we're looking for a little bit larger move, but this gives us further conviction to go ahead and potentially enter this trade with minimal risk, looking for a bigger target picture. So I'm going to be doing a webinar this afternoon at 4:30 p.m. Eastern on how we use high probability or how we trade high probability technical patterns in conjunction with using Smart Seasonal Scanner. If you'd like to join, the registration link in the description box. Give us a like, and we look forward to seeing you there. Good luck, good trading, and we'll see you on the next update.